Thanks, Morgan. It's great to be here as well.
So one of the things that you and I have discussed and certainly came up on the call today, the fact that you are forecasting for sales to be flattish in 2023, but that you expect a return to top-line growth in 2024. Supply chain continuing to be the culprit here. Where is that pain most acute? What is it going to take to see some of those pressures ease?
Yeah, great question. You know, it's part of what we saw here in 2022. You may recall back in the second quarter, we lowered our sales forecast by about $750 million, and that was due to declines that we saw, supply chain created declines on the F-35 program, the F-16 program, and a few of other programs that we have in our backlog. We expect that pressure to really continue through 2023, but we do expect a rebound in 2024. And so those are predominantly the issues that we face. What we've seen here in 22 is really extending out into 2023 as well.
Okay. So the demand for weapons, we just touched on it, that Lockheed makes, whether it is the Javelin missiles that you make with Raytheon that are being sent to Ukraine right now, the HIMARS launcher that is actually being used with great success on the battlefield there as well. Also, the fact that allies are raising defense budgets. How does that factor into the outlook over the next couple of years?
Well, it's certainly gotten better. If you think about where the defense outlook was a year ago versus where it is today, it's substantially better. You know, as you mentioned, Morgan, our backlog grew here in the third quarter. We expect it to grow again in the fourth quarter, and we expect even orders and backlog again in 2023 to grow as well. And so we'll start converting on that backlog starting in 2024, and then in 25 and 26 and beyond, we expect continued growth. And so that's where we are today, and that's what the outlook looks like.
International sales, about a third of overall revenue. There's a lot of focus in the media and certainly on the Hill right now where Saudi Arabia is concerned on the heels of that OPEC Plus oil cut just a couple weeks ago. Some talk that maybe we could see some curtailing of weapon sales to that country. On one hand, on the other hand, as I mentioned, you do have these rising defense budgets among allies. So how is Lockheed navigating those potential foreign military sales right now?
Well, you know, for foreign military sales, we take our lead from the U.S. government. Those policy decisions are really outside of our hands, and we just follow the government's lead on where and when to make those sales. And, you know, in many cases, we also sell defensive products, so you know, there's an opportunity to continue to sell those types of products. But again, that's a decision that ultimately is a policy decision that the U.S. government will make, and we'll follow that lead.
You know, if I heard you right, sir, I gather demand is strong and you expect it to continue that way. But you cited earlier the supply chain bottlenecks that caused you to revise downward your sales estimates earlier this year. But so the question is, can you meet the demand going forward? Will you be able to execute to meet the demand?
We believe that we can. You know, between now and 2024, that gives us time to continue to work with our supply chain. We have anywhere between up to 500 people at our supply chain today to help them with their operations and improve to the level of production levels that we need. Between now, that'll give us 15 months before, you know, we get to 2024, and we're investing ahead of need as well. And so whether it's test equipment, assembly equipment, all the elements that are required to start delivering at these incremental ramp rates in 2024 and 2025, we believe we can meet that. We have sufficient time for it.
And Jay, it's Contessa. I'm curious about the problem of chips, and given the switch from the Biden administration on chips in China, how that might affect your process moving forward.
Well, certainly it's a watch item for us. We've been fortunate this year. We really haven't seen a significant impact due to electronic components. Ours have been, to be honest, some of our platforms have been more of the structural parts of the aircrafts of the platform that have really driven the delays for us. So far, right now, electronic components have held in there pretty well. And we've got a pretty good line of sight for the next 12 to 24 months there.
And speaking of China, it is the so-called pacing threat, as the Department of Defense would put it. Just last week, we had the national security strategy that was unveiled too, which focuses heavily on China. Looking at Lockheed Martin's R&D and CapEx spending, $4 billion expected to be spent in 2023. How much of that is going towards countering another major power on the global stage? What does that mean in terms of new technologies that are being developed?
Well, a significant amount of our R&D is being spent really in those areas. We have 14 technology roadmaps that we're spending most of our independent research and development on. And so we spend north of $1.5 billion on R&D. And about 80% of that is going towards these technology roadmaps, which is really modernizing the capabilities for the U.S. warfighter.
Shepard Smith here. Thanks for watching CNBC on YouTube.